we need three things to make it work for everyone. Because we don't believe in like vertically segmented stacks. I think we should create really open architecture networks.
But they'll do it in their own fiat currency. They'll denominate their stablecoins so that you don't have. This is the same reason America is accelerating stablecoin adoption.
What needs to happen to actually see that go through? Because it seems like the logical next step for this entire kind of Web3 ecosystem. Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it. Luca, welcome to the show. Thanks for joining us. We had a hell of a week so far. Welcome to Buenos Aires.
Thanks, guys. Thanks for having me.
Is it your first time?
No, I have been here before. But last time we met was like on the other side of the world.
It was
cool.
All the way on the other side of the ocean. Yeah. And it was a fun chat too. We met in Singapore. We had a great podcast. If you guys haven't seen it, go check it out. It's live on all the platforms. And you really helped us understand how M0 is underpinning the entire stablecoin super cycle. This show is called Stabled Up. And so I think anyone who's been stabled up in the last few weeks has done quite well in the market because it's been
they've saved their ass.
They've saved their ass if they've been stabled up. And so you're helping companies stable up at M0. The most recent partnership is MoonPay, and you guys have done a partnership with MoonPay to help enable enterprise stablecoins. Tell us a little bit about enterprise stablecoins as a category. We talk a lot about stablecoins that are used for payments and real fungible money. These are typically Genius compliant stablecoins. Then you have yield bearing stablecoins. Enterprise stablecoins feels like it's a brand new category of stablecoins. Generally, stablecoin super cycle. Why are enterprise stablecoins particularly important?
Yeah, I think stablecoins, we discussed this last time. In my opinion, stables are just a piece of infrastructure. Mm-hmm. Like it's the next way we will interact with money in digital form. So some stablecoins are used to move money around. Other forms of stable are just simply powering the dollar virtual accounts in an application. So they exist within an application. I think this is going to be the fastest growth category in it. So we will move around. Money will exist in places we don't know what is powering it. And so like money when it exists within enterprise platforms, that's probably the category that you're referring to. But like ultimately, this is a platform that will help building so many different financial use cases. Like everything we're building now within a bank, we can decompose and build with, and the stablecoins are like the platform that connects them all. On the MoonPay, I mean, we've known the MoonPay guys for a while. I think everybody knows MoonPay. It's like one of the most active and successful companies in the history of crypto. And the team has been expanding their reach. They obviously are one of the most famous on-ramp provider. That the way people started to interact with crypto. Most recently, they have expanded to actually play more in the stablecoin issuance space. You might have known, like have done a set of acquisitions in that space. They got the licenses required, so they are definitely one of the best and most like crypto native players that wants to expand their reach and help people to interact with crypto and simplify their lives. And we decided a while back to partner where M0 would have been the on-chain infrastructure rail on top that we built.
Yeah.
So this partnership was announced. As most of the times when you announce this stuff, there is still a lot of things to sort out behind the scenes. So now we are working like 24/7 to make sure that our products and what we're offering to the market is live in the next like couple of weeks. And we have a bunch of partners potentially lined up that will issue on the MoonPay M0 stack in the same way MetaMask is issued on the Bridge M0 stack, for example.
Is it a strategic decision to go to the wallets? The MetaMask, that's your flagship partner. You helped launch the MetaMask stablecoin. Now you're at MoonPay. MoonPay, again, payment provider. Is this kind of like more going into this direction? You're looking at distribution partners, wallets, fiat on-ramps, off-ramps, these sorts of things, and you're going more and more in this direction. Is that intentionally the strategy? And if so, why?
Yeah, I think it's intentional up to a certain point. I think MoonPay plays two things here. I think they obviously have connection with the distribution, but they also now are trying to do other things. But in my opinion, like when you build a piece of infrastructure like M0, we need three things to make it work for everyone. Because we don't believe in like vertically segmented stacks. I think we should create really open architecture networks. We want to work with the builders, which is the most important thing. People that build cool stuff on top of our rails, like the teams that build new financial use cases for crypto and non-crypto. So that's our main client, let's say our main market. On the other side, we want to connect with financial institutions that can custody, can do the regulatory stuff, because the stable coins need to be really stable. And then also the connectivity with the distribution. In the case, I think MoonPay was started as an on-off-ramp, like distribution machine and platform, but now they want to become much more. And I think so they can play both. But in the case, they're not the only ones. Like we made the example of the friends at Bridge that we also partner with. I mean, Bridge can help platforms and corporates bootstrap their own stable coin, but the Bridge is part of the Stripe family, and Stripe obviously has huge distribution with vendors and merchants and users. Yeah. So we need a bit of all the elements. We're trying to build the most transparent rails for people to do cool stuff without being captured by one vendor.
So is Stripe exploring their own stablecoin?
No, they're not. But Bridge is helping others launch their own stablecoins, right? On there, and with some level of integration with Stripe. I don't know if Stripe is thinking about their own stablecoins.
I wasn't sure if you knew anything that we didn't know.
I don't know.
Luca, we have a consistent mental model on this specific segment of the show of Roll Up TV, where we discuss there's really two types of stablecoins, and I'm curious to hear if you agree with this. There's these Genius compliant, backed very clearly publicly one-to-one stablecoins that are almost like hard pegged to $1, right? It's basically, it's almost impossible to have a depeg situation because they're very clearly backed. And then you've got these kind of yield bearing, more esoteric, exotic forms, think about like the USDEs of the world, and these types, which are natively yield bearing and provide a lot more kind of like functionality in DeFi, but also come with certain risks. And we're kind of seeing these two worlds really permeate as the two kind of like major classes of stablecoins. Do you agree that is the current right way of thinking about it? Or if so, why? If not, what are we kind of leaving out here?
Yeah, no, I actually don't agree. What I mean is slightly disagree. Let's say that I don't think these are two alternative models. I think these are two alternative layers. What I mean is like nobody, not even the builders, would actually call USD a stablecoin, and they wouldn't call USDAI as a stablecoin. I think everybody knows clearly that these are other things, other products. So in my opinion, I look at things in layers. I think in my opinion, stablecoins are a platform, the main platform, like super risk-free. The only yield they can provide is the risk-free yield. They're super liquid, is like this kind of fabric of finance. It currently is played by bank deposits. Like you have bank deposits going around. I think this is the main layer. This is what M0 is, risk-free, as liquid as programmable as it comes. And then people can build products on top. So some people build payment products where there is no additional risk. It's just like another functionality. Some people build investment products. And so I think in different layers of the stack. So we are trying to build the best possible base layer for others to build product on top. Some of those products will not add additional risk because they will do other things, and others will add additional risk and additional returns. But I think it's very important to have this distinction because, return is proportional to risk. So nobody should ever market any asset that is yielding any basis point above the risk-free rate. By definition, is not risk-free. And so people should think about how they use and how they embed certain assets, also thinking about this, right? There is the right product to do the right thing. So I kind of agree with you that these are two different categories. I wouldn't put them one next to the other, but just one on top of the other.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com, 24/7 for the world's biggest prediction market.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again. And one of the things that you can layer on top of the stablecoin base layer is FX, foreign exchange. And so one of the missions of M0, as I understand it, is to bring together a fragmented stablecoin landscape. We have several US dollar denominated stablecoins, but we also are starting to see
dozens.
Yeah, dozens, if not, soon to be hundreds, right?
Yeah.
And so eventually we'll also start to see the emergence of more geographically based stablecoins that are not US dollar denominated, but denominated in other fiat currencies. How much are you looking at FX as one of the layers on top? Is M0 thinking at all about some of this functionality? Or generally, how are you looking at the clearing of different denominations of stablecoins?
Yeah, I mean, a lot of stuff that you're mentioning that's super relevant. I think in general, like starting from the beginning, I think stablecoins are maturing. Like at the beginning, stablecoins were considered like a settlement asset for crypto trading. Then they became a payment asset for international payments, and then now it is like a proxy of a deposit business, but it is ultimately a platform. You can build stuff on top. So this platform, the most important thing is interoperability and shared liquidity. Like I always say, like, how many dollars, I think we discussed this last time, like how many dollars exist today? People say $1. There are like hundreds, because every bank de facto is a different form factor of a dollar, but they are all interoperable and liquid behind the scenes. So what we're trying to do here is at M0 is, first of all, solve interop with technology, not only liquidity, because solving with liquidity is very inefficient. So you don't need necessarily clearing houses within the dollar denomination. Then we move to other currencies. Now, we didn't need other local currency stablecoins when stablecoins were like international payment products, of course. But when stables become a platform to build financial services, then we have financial services in any currency denomination. So we will have many more of this. Then obviously the FX problem will come, but I'm bearish short term on chain FX because I think that I used to work in Wall Street for quite a while in investment banking, and the FX market are the most liquid markets in the world. Are like they're super efficient in specific corridors. So it's gonna take a while, right? I think we're gonna get there, but first we need to bring the stuff on chain. Then we need to build new primitives, and then we will start seeing these interactions on chain. But I think we're a few years away. I think it seems the most obvious problem to solve, but in my opinion, from a capital perspective, is actually the most difficult problem to solve, FX, because there is so much capital deployed in traditional rails.
We are obviously in Argentina, where this country has been plagued by an inflationary regime that's gone out of hand. I was here in 2023. It was $1 to 400 pesos was the rate, and it's currently 1 to 1400. And that was
it's 3x since.
Yeah, quite literally. And I came in January of 2023, I believe. And then I also came back in April, and it went from 300 to 400. Okay. So there was this insane rise of the dollar comparatively, or this insane devaluation. When it comes to bringing these new kind of emergent markets on chain, stablecoins seem to be the most obvious, easy thing to explain to people to get this kind of store of value with the US dollar. What are we missing to onboard Turkey, Syria, Argentina, Ecuador, Venezuela, and the likes into a fully US dollar denominated economy using like a neobank app or iPhone or a mobile phone app? What needs to happen to actually see that go through? Because it seems like the logical next step for this entire kind of Web3 ecosystem.
It's that we have conflicting interests, right? I mean, the retail users, they want to preserve their market power,
right?
But the governments and economies, they don't like to see this such an escape of capital from their environment.
Yes,
because also in good faith, right? Because this is just worsening the problem. Is making the local currency very, very weak, and it's worsening the economic problem. So some of the concerns about the capital escapes and are legitimate, because this is it is very, very concerning. The reason why the governments put capital controls is that they want to stop the bleeding. But on the other side, it is credible threat, because now for governments that are not very good with their fiscal policy, they know they need to step up their games, but it's so easy for people to pull money out. And so we will see a lot of pressure on smaller economies to sort out their finances, because now there is an option that is ready to go, that you can access dollars or bitcoins or digital assets in a way that you couldn't do like 10 years ago or 5 years ago.
Then I guess a logical follow-up here is what is the path that you actually see playing out here? Let's say over the next 5-ish years, if we have these conflicting forces, which obviously makes sense, is this going to be a peaceful kind of transition, or how does this? Because I feel like it's happening regardless, right? Because if you're a citizen of one of these markets, you're going to want US dollars. I mean, whether your government wants you to do it or not, you're going to be taking care of your family, what's important to you. How do you kind of see this transition happening, whether it be with policymakers, with governments, with entrepreneurs? What do you kind of see unfolding over the next couple of years?
Yeah, I think it's not, I mean, couple of years is a short time, but I think it's happening, as you're saying. Like, when something is possible, it is going to happen. I don't think it's going to be gentle, because there are a lot of forces, and ultimately money wins. What I mean is, like, even, for example, even in the US or Europe, right? When stable coins emerged, I mean, we almost already forgot, but to build in crypto like a year ago in the US was very complicated.
Right.
A year and a half ago was very complicated, and we were in this situation. And I don't care about politics at all, but we were in this situation where we had the big banks that are lobbying for the Democrats, and tech was lobbying for the Republicans, which is kind of weird, because like stable coins also in the US, they are threatening the banking system, because if you're a bank, you have very cheap deposits and you can lend these deposits out. Like, nobody wants to give you money now, because why do I need to give money to a regional bank if I can put money in a stable coin that is giving me so many other things? So even within an economy, there is going to be a lot of lobbying, a lot of pressure, because people are defending their business, and the same is going to happen in like other markets. But at the end, unfortunately or fortunately, capitalism always prevails. Like, even like, there are now like this, we're not small startup businesses anymore. We can have our voice heard in the US, in Europe. Europe started saying we want to be very, very conservative in stablecoins. So you cannot build a stablecoin. De facto, you can build a stablecoin on top of banks, which are very antiquated. And now they're complaining because the capital is flying out and is going into dollar-denominated stablecoins. Sorry, but not sorry. Like, so I think that now they will probably change their mind. So I think it's gonna be a combination. It's not gonna be gentle, but let's see. I don't know exactly how it's gonna happen, but most probably we will have in certain jurisdictions more crypto-friendly governments, like has happened here, at least on the surface. It's happened obviously in the US, and certain local equilibria, status quo will change, and ultimately. But I think I'm very bullish long term. I'm cautious short term, because these dislocations, they create problems, right? Some people that don't have the mindset, the technology to move out and just take care of their families, they will suffer, right? Because they are left behind.
Right. Want simple, want fast, want every chain? Use Relay.link, the fastest bridge in crypto. Transfer your assets cross-chain instantly with very low slippage right now on Relay.link.
YEET is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Looking for yield that stands out? InfiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. InfiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Yeah, and governments could feel behind the curve, like Europe is right now. As to your point, now they're seeing the capital flight out of their currencies, and they're seeing it into stablecoins, US dollar denominated stablecoins. I think the point that you made at the very end is one of the most important ones, which is that this could accelerate the crypto adoption in these countries. Once they realize that they're losing capital to the US dollar through stablecoins, they can choose to resist. They can continue to resist, but it is inevitable, to your point. And I think this will only, once they realize this, they will accept stablecoins, but they'll do it in their own fiat currency. They'll denominate their stablecoins so that you don't have, this is the same reason America is accelerating stablecoin adoption. It's because it's not fiat that is going into some other currency. They're saying fiat go into their same US dollar denominated currency. So you don't want capital flight out of your denomination. Doesn't matter the form factor, to your point. You just want it to stay in your denomination. And so once other countries realize that they're losing capital flight to the US dollar, they'll end up just creating the more advanced form factor of their own denomination.
Yeah, and then a couple of things to add is like, yes, for sure, we live in a more global environment. So some weaker currencies will struggle because now we are super interconnected compared to like 50 years ago. But the other thing is, and then, we are very open builders, and we always we try not to engage with regulators too much because typically it's a waste of time. But we are really, I'll mention this also in the podcast. Regulators should reach out and have constructive conversations because this is going to happen. So unless they need to be reactive because in 5 years they need to defend themselves and somebody's going to vote them out, it's actually better to be constructive with technology builders because this stuff cannot be stopped. It's so funny, like Revolut, for example. Revolut is one of the most successful fintechs in the world ever. I think Revolut is based in the UK. I think they just moved out of the UK. Probably their headquarters is now in Dubai, but they started in the UK. They are probably the largest, one of the largest banks in terms of UK users. Revolut doesn't have a UK banking license yet.
Wow.
They're not giving it to them. They don't have a banking license. They're using partner banks in the UK. They have banking license in Europe because the UK is worried that Revolut as a neobank, I believe they didn't have a banking license until recently. I think they still don't, because they are afraid of that. But better products win.
Yeah.
So their customers are going there. So what are these guys doing? I really hope the regulator is going to be not crazy, but constructive in just engaging with smart founders and builders that are building cool stuff that can help their economy.
And our world is so interconnected now. This happens in UK, and like you said, they moved out of the UK. They weren't getting what the UK wasn't providing them the sort of regulatory clarity that they were looking for, and so now they're in Dubai. That based on what you said, how many companies are we seeing in the States move out of Delaware, go to Texas, or move out of California and go to Texas? This is happening because we have a more connected world where we can move our companies if we're not seeing the type of structure that we're looking for on a regulatory or a government landscape.
Just one thing to add there, guys. It's the point of some folks will take the entrepreneurial jump to do something that is borderline, debatably legal in their jurisdiction on the behalf of everyone else. Those folks are few and far between. And also the folks who will, if their government is telling them that they cannot hold stable coins, or that they cannot, take money from their bank account, put it onto an exchange and kind of operate in this like stealthy, quasi illegal fashion, those folks are also few and far between. And so when you have this kind of oversight from this like restrictive oversight from governments or from, leaders, it really creates that further divide. And I just wanted to kind of like double click on that point, because I feel like that is the concern of the stablecoin adoption cycle, is that there's going to be this kind of bifurcation of people that are able to kind of escape in ways and who are willing to take that risk, and those who don't. And that split is going to be a unique development to watch.
Yeah, and also you cannot, going back to what we said before, you cannot ignore reality, because currently technology gives us the ability to have a global connected system. Right. So it's going to work. Like even in if people cannot use stablecoin, they will use Bitcoin, or they will use ETH. And there are so many ways that are not necessarily good for the users. I think we should always be constructive. And but I feel it's happening. Like compared to a couple of years ago, there's no comparison.
Yeah, it certainly is. And the reason why is what's on this shirt. We're returning to fundamentals. And that's what's happening. Stable coins are one of the fundamental things, not ethically, but not
a gift to you. Luca.
Yeah, gift to you.
Guys.
Absolutely. Return of fundamentals, payments, stable coins are one of the most fundamental things that are happening on chain, remittances, and M0 is helping to power this new economy.
Luca, what does return to fundamentals mean to you in a short excerpt?
For me, is spending time doing the difficult stuff. That makes a difference.
Yeah.
So just get away from the fluff and just spending time solving the difficult problems.
Yeah. Luca Prosperi, thanks for your time, man.
Thanks so much,
coming,
guys. Good to see you again.
Pleasure to have you.
Cheers.